Hello everyone and welcome to a new video, and today we are going to cover lagging and leading indicators of technical analysis in continuation with the financial education series. Now before I can proceed, I would request you to kindly subscribe to my YouTube channel if you have not done yet, and please do not forget to press the bell icon. Besides that, you're going to find the Telegram and the WhatsApp group. Make sure you're joined in either one or both, because this is the place where you're going to get instant alerts whenever any new video, any new earning opportunity is released. Next and most important thing is a disclaimer. Please take some time to read the disclaimer in the video as well as in the description below. I'm not a financial advisor. As such, you're requested to do your own due diligence before making any investments. So let's move ahead to today's topic, which is the technical analysis tools what you use, the leading and the lagging indicators. Now, what are these indicators? Basically, when you're doing technical analysis, there are two main kinds of indicators. One is a leading indicator and second is a lagging indicator. Lagging indicators are sometimes also called laggard indicators. Leading indicators, the thing is like it gives you more real time, and lagging indicators are the indicators which give you after the event has sort of occurred or a delayed information. Now each of them has its advantages and its disadvantages. A leading indicator might have its advantage in one end and maybe disadvantage. So it depends on your mindset, the kind of a trader you are, and what position, whether you're a short term, you're a mid term, or a long term trader. Based on that, you can choose the kind of indicator you would like to use. Now, the comparison between both these indicators. Now, in case of leading indicators, the main advantage is that it gives fast signals for entry and exit. What this means is that supposing there is a movement in the market, it may be a stock market, forex market, or a crypto market, you can expect the leading indicator to give you a very early signal, so you get a very early entry and probably an early exit also. So there is a good chance of taking a big profit, as well as if you are shorting and if you are moving out or booking your profits, to close your profits before it can erode away. So this is the advantage of a leading indicator. The second thing is like if you are a day trader kind of a thing, then it gives you more trade opportunities which a laggard or a lagging indicator would not give you. The main disadvantage of this is that the fact that it's fast and it reacts to instant price changes, it may end up giving you multiple false signals. So this particular indicator is mainly used by people who are short-term traders, day traders especially, because these are the people who require an early entry and a early exit. So if you compare that with the lagging indicator, the disadvantages of the lagging indicator is just like this gives you a fast signal, this gives you a slow signal. So like if you are taking a entry based on a lagging indicator, there is good chance that the initial movement has already taken place, and likewise supposing if you are trying to exit and there was a drop and a laggard indicator will show you later, so there will be a profit erosion also. So this is one of the disadvantage of the lagging indicator. Now another thing is, if you're a day trader kind of a thing, you might feel that there are lesser trade opportunities because it gives the signal after the event has occurred. So if there is a multiple buy, sell, and again a buy, then it wouldn't be probably showing you the sell in between. It will just show you the buy thing which is there. The advantage is that it gives lesser false signal. So what is an advantage for one indicator becomes a disadvantage of other, and what is probably a disadvantage of other becomes the strength. So one indicator strength is the weakness of other one, and the weakness of other is the strength of this one. So when what happens with lesser false signals is, like in case over here, like day traders, just based on the slightest of movement, you're going to get the signal of change in direction, and you might enter the trade, and the next very moment the direction changes, and you might end up hitting your stop loss, which is lesser in case of the lagging indicator, because the indicators plot after a certain time. So just here you might have a lesser number of stop losses being hitted, and it helps you save your capital, and for the its advantages for mid-term and long-term traders who wouldn't want to do multiple trades a day, and who don't want to take the pressure of entry, exit, and doing multiple trades. So as you can see, it depends on your trading psychology, what kind of trading your personality is. So you can't rather pick up from either of the two, each one having its advantages and disadvantages. So based on your trading style, you can choose the leading and the lagging indicators. Now what can be done is, just like any other indicator, you combine it with two or three additional one to filter out the false signals. So let us go out and check out a few of very popular indicators, both leading and lagging, what are used. Now, one of the most popular indicators, which is the relative strength index. Now, in this particular video, I am going to be just brushing up on the various indicators which are there, the lagging and as the leading indicators. Now, I'm going to be covering a separate set of video in detail for each of this particular indicator, wherein I'm going to cover the details, how to little bit of accommodate it, the change little parameters to suit it to your requirement, customization, and a lot of things. Now you can't cover everything in a single video to cut down on the length of the video. Now before proceeding to that, just a short reminder that I have already have investing.com, how to use that, because that is the place we are going to use this, and candlestick pattern videos done earlier. So if you have not seen that video, request you to kindly see that, and you're going to find the description in the video as well as in the description section. Now relative strength index is one such popular leading indicator, and is one of my favorites. The stochastic oscillator again is the one which I use. The Fibonacci retracement which is there. Chaikin money flow is one of my favorites. Again, I don't know whether it falls into the popular leading category, but I have put it over here because I have seen that it can give you real time kind of an info, and if other indicators fail, the Chaikin money flow saves you out. So this is how the RSI would look like. Now this is the investing.com site. You can see courtesy investing.com we are using this, and this is a chart of Reliance. Here you can see there is a chart candlesticks. Now video both how to use investing.com as well as the candlestick patterns, as I mentioned, has already been covered. Now here what you can see over here is the RSI over here. Now you can see the RSI index, this thing, it's the sort of real time. When the RSI is moving up, you can see the stock price is also moving up. When the RSI is moving down, the stock price is moving down. So you can see it will be in sync with the stock price. That is why it is a leading indicator. Now there are various side taking, like the RSI, like 70 and 30 are the levels by default. So 70 is oversold and 30 is sort of less overbought and oversold zones. Then you have this is your oversold and this is your overbought zones. So then you have the kind of stochastic oscillator again here. So again the same script, I've just selected the same script, and this is the stochastic oscillator. The default settings are 1413 and 8020 are the for oversold and the overbought zone. This is the oversold and this is the this is the overbought and this is the oversold zone. And you have two lines over here. So based on the crossover means when one line crosses the other, that is the time you take a decision to enter. Now this is basically like just one thing I forgot to tell you is the RSI sort of shows you the strength of the this thing. So higher the RSI, like here the RSI value is showing 51, it's normally between 0 to 100. So higher the RSI value, the more power upward movement, and lower the RSI value, the lesser the movement. Now the stochastic oscillator mainly is used for entry and probably exit. So like when you can see here, when the positive here, I have normally made it a standard to use a red and blue. So when the red is for positive, so when the blue is moving upward, you can see the trend is up, and then there is a up down here in the overbought zone. Over here in the overbought zone, you can see this up down movement. Then there is a big red candle has crossover over here, and it is moving down. You can see the price is moving down. So when there is again a crossover, you can see the price is moving up again. Again there is a down, there is a positive crossover, you can see the price is moving up. You can see the crossover is happening earlier and the immediately sort of the you can see in the candles also. This is another leading indicator. Fibonacci retracement tool, again this tool I will be covering separately over here, but you can see this is a trend, and as a trend is moving up, you apply this particular tool and then it sort of gives you level by which it can drop. Like you can see these are the lines what you can see, these are the values. So you can see it's coming and taking resistance over here. It came and it took resistance over here, then it tried to move up. So this gives you the sort of support and resistance levels. You don't need to plot it automatically, manually. The tool is there, and how to go about and use this tool again I will be covering separately over here. Then you have the Chaikin money flow. This is one of my favorites over here. Now it has from zero line over here, and this is a graph with the line which moves over here. So this is an index of kind of somewhat like a volume, to put it in simple terms, like how much buying is going on kind of a thing, how much money is flowing in. That is why the name money flow index. So if you see this above the zero line, you can expect, even though the other indicators might give you like here you can see somewhere here they are okay, here you can see that there is a slight price drop, but the money flow index is still above the zero line, so you can still expect the price to move upward. So as the money flow index moves away from the zero line, you can expect a bull run taking place. Now all these four indicators what we discussed, the Chaikin money flow, Fibonacci, stochastic relative strength index, you can see are sort of working real time. So this is why these are the leading indicators. Next we are going to cover the lagging indicators, which mainly the most popular ones are the simple moving average, the exponential moving average, the moving average convergence divergence, that's the MACD, and the Bollinger Bands. Now SMA you can see is this is plotted basically straight away on the main chart where the candles are there. So you go over here, you select the particular this thing, moving average. Now right now a moving average 9 is applied over here. So this is sort of what you're going to see in the chart. Now this is a delayed thing. This calculates, like since the moving averages of 9, so it calculates the moving average of the 9 candles depending on what you have selected, the open, close. Okay, then next we have the exponential. This works similar to the moving average, the only difference being that from these 9 candles, for example, weightage is given probably to the last few candle current data, basically last 2 or 3 candles more weightage is given. So probably it is a little more fast, gives you a faster signal than a simple moving average would do. Then you have MACD, that's a moving average convergent divergence. This is also a very popular tool, and you can see over here you have a histogram over here, and you have the signal line and the other line which is there. So these are the default setting 12, 26, 9, and you can see the bigger the histogram sticks which are there in between, the bigger will be the trend over here. So a positive, I have denoted a positive blue color as a standard and a negative red color as a negative. So when the blue line is above, you can see that the trend is positive, or here the blue line is above, you can see the price is moving upwards over here. Here there is a crossover, negative crossover, so there is a sideways, in fact it's not a big one. So you have a negative positive kind of a crossover, then you have again a positive crossover, you see here, and the candle has turned negative and you have a negative crossover and again a positive crossover. This is a Lagarde indicator basically, but it can be used, there is a strategy how to use it to kind of understand, seeing that on a higher time frame, to understand what the possible next trend would be. So it's also a very powerful tool which is there. Again, I'm going to cover it separately in another video. The last from the set of Lagarde indicators, what you're going to use is a Bollinger Bands. Now Bollinger Bands over here, as you can see, it has a central line which is there, which would be your some kind of a signal line based on which you're going to do your buying and sell. And these bands what are seen are the outer limits. You can see this uptrend, and here there is a kind of a side trend. So you can with the bands it is easier to identify the trend, and the central line would probably give you the buy or the sell signal which is there. So again, this is a Lagarde indicator because it depends more of kind like the moving average which is there over here. Now all these individual oscillators and tools I will be covering in a separate video. So make sure you are tuned in to the same, and if you like this video, make a point to do share it along, and of course do not forget to press the like button, turn on the bell notification so that you can get instant alerts, and in case you have anything which you have not understood, you can always ask me via the comment section. I'm going to try to reply to you ASAP. These are the places, my WhatsApp and Telegram, where you can get in touch with me in case you do need to, and do join the Telegram and the WhatsApp group so that you can continually get the updates whenever more and more such videos or any other earning opportunities are released. So until the next video, take care and be safe.